Hi there everyone, and welcome to Accounting Tax SOS, where we cover everything accounting and tax. My name is Christopher Cox, and in this video we are covering an intermediate accounting topic. If you guys have watched my last video, we covered an intermediate accounting question / tax. So we kind of bundled two topics into one video, which I think was pretty beneficial. But if you haven't checked it out, go ahead and check out my last video. But today we are going to be going over an example of gain or loss on non-monetary exchange. If you don't know what that means, that is fine. I'm going to go ahead and explain that to you all soon. But let's go ahead and get started. Okay, so before we jump into this example, I'm going to explain a couple things to you all so we are totally up to speed whenever we get started. So what we're trying to do in this example is determine the loss or gain on the exchange of the items, the assets we're talking about in this example. Then secondly, we're going to determine the initial value of the asset. The thing I highlighted was the book value of the asset, and then following that, it tells exactly where that came from. After that, the fair market value, I'll explain that one in a second, and then the amount Paulo paid to complete the exchange. So yes, this is an exchange with non-monetary values, but we are only using that to compute the loss and the gain. We use the 36,000 to compute the initial value of the tractor. So I'll explain all this more in depth in a second, so let's go ahead and get started. Okay, so we are going to start here with number 1. What is the amount of the gain or loss that Paulo would recognize on the exchange? And what is the initial value of the tractor? So first, we're going to determine the gain or loss on this asset. And it's really simple. First thing you do, it is the book value minus the fair market value. So gain or loss, and that equals book value minus the fair market value. And I'm going to abbreviate with FMV. Okay, so first we're going to go up and find the book value, and that is $20,000 here. It reads the old tractor had a book value of $20,000. It goes on to say how it calculated that. So you take the original cost of $44,000, that's what he paid for it, less the accumulated depreciation of $24,000. So the $44,000, and then you subtract the $24,000, and then you get this answer up here, $20,000, and that is the book value. So the book value, $20,000, and then you subtract the fair market value, and that is what it's worth right now. There's ways to get fair market value, but in this scenario, it's given. Sometimes it's calculated just by comparing this asset to another asset like that one. So another asset might be worth $10,000, so you're going to price yours at fair market value of $10,600. So $10,600, and then you will get $9,400. And this is a loss because the book value exceeds the fair market value. So you are going to experience a loss in this scenario. So for question 1, Paulo is going to have OLO will experience a loss of $9,400. $9,400. So I'm going to talk just a little bit for a sec, tax. So with this $9,400 loss, depending on the tax year in his situation, he would be able to use some of that to offset his tax liability. And then whatever he doesn't use would carry over to next year. And then it would just carry over indefinitely. Okay, so that was number one. We'll go ahead and write that there. And then we will move on to B right here. Okay, saving a little space here. Hopefully I can get all of these questions in this confined space. Okay, so part B, that would be this part here. What is the initial value of the new tractor? And the initial value, we are not computing any gain or loss. We are just simply finding out what this is worth, this new tractor, this new asset is worth. So we will go ahead and start by taking the fair value of this asset, which is $10,600. So fair value FV is $10,600, and then we take the cash given, of $36,000. Okay, we're going to add these together, and then we will arrive at the initial value of the new tractor. And I'm just going to write initial value. So you will get $46,600, $6,600. This is pretty simple. What you're doing is you're taking this value here, what it's worth right now, and then you're just adding basically what you paid, the extra value that you're adding to it. So you arrive at a total value of $46,600. So we are good with this one. Let's go ahead and move on to number two. And I think I'll have enough room. I'll go ahead and change up the colors so you all don't get these two mixed together. Okay. Okay, so number two is it's similar, but they're just using a little different scenario. So number two, here we go, two. Okay, part A of number two. Okay, so part two reads, assume the fair value of the old tractor is $30,000 instead of $10,600. What is the amount of gain or loss that Paulo would recognize on this particular exchange? So right now you can go ahead and assume that there will be some type of gain, because like I said before, if the book value exceeds the fair value, then there will be a loss. So in this case, the fair value of the tractor is more than the book value, so you can assume that there will be a gain. But let's go ahead and figure out what that gain will be. So first we're going to do is take the fair value, so FV, and less the book value. Okay, so we are going to take $30,000 of the fair value, 30,000, just as it says here above, $30,000 instead of 10,600. And then we are going to subtract our book value of $20,000. Okay, and then we will receive the gain on exchange. Gain on exchange of $10,000. Okay. So this is our answer for part 1 of 2. So now we are going to do what is the initial value of the new tractor. Okay, so initial value, we're just going to do like we did before. Very simple. We are going to take the fair value of old tractor, FV of old tractor, okay, which was $30,000. And then we are going to add the cash given, the excess value here. We're going to add more value to this asset of $36,000. And then we are going to arrive at $66,000, which is the initial value of new tractor. Okay, so this was a pretty straightforward, simple example of what is going on whenever you're trying to compute the gain or loss on an asset. Like I said before, this is a non-monetary exchange, although it does say up here $36,000 paid. We are determining the gain or loss relative to the book value and fair market value. We do not take into consideration the amount he paid to complete the exchange. So if you guys come across a problem like this, don't let that confuse you. Gain or loss is the book value minus fair market value. So I hope you guys enjoyed this video. Hope you learned a lot. And if you guys want me to go into more detail about this type of problem, just let me know, and I'll make that my priority for the next video. Thank you guys so much, and I'll catch you later.